Good afternoon, boys and girls. Welcome to Liberty Call. It is Thursday, July 21st, 2022. Sorry I'm a few minutes late. The Astros game just ended, or at least the first game of their doubleheader with the Stankies. And J.J. Matijevic just hit a walk-off single, which was nice. They tried to give up the game in the top of the ninth and allowed the Yanks to tie it up, but the good guys came through in the end, so that's always good. Again, you can see how my buddy Jake back there is super excited about another Astros win. He probably wonders why we stare at these big screens all the time, and he doesn't really seem to even notice that there's something on it. All right. Let's see here. Let's go ahead, and if it's your first time watching, give me a big old thumbs up, a like, a share, subscribe, all that good stuff. I would greatly appreciate it. And let's go ahead and jump into today's market. It definitely was a kind of a back and forth day. Let's take a look and just look at the 1 day for now. This was the Dow Jones today. You can see that we were in the red territory for about, let's see, it was about 12:30 Eastern is when it crossed over, and then it crossed back below the midpoint. Was it about 1:30 Eastern, and then finished the day strong. So definitely was, something we weren't, kind of a little bit of a shock. Again, if you were watching, most of the day, you would think, well, the market's going to, finish the day in the red. But hey, things do happen. So let's go ahead and look at all the numbers across the day. The Dow Jones finished up 0.51% at 32,036. S&P 500 was up just under 1% at 0.99% at 39.98. NASDAQ was up 1.36%, closed at 12,059. Small caps are up slightly at up 0.13. The VIX fell again today, down 3.22%. It's currently sitting at 23.11. Moving on to the other exchanges here in the Americas, Canada was up 0.22, Brazil up 0.76, Mexico up 0.73. Headed over to Germany, they were down 0.27. The UK was pretty much flat. It finished up 0.09. France was up 0.27. The Euro Stoxx was up 0.31. Netherlands was up 1.47%. Spain down 0.2. Italy down 0.71. Switzerland up 0.68. And Portugal down 0.94. Head a little further east, the MOEX out of Russia was down 1.04, and the RTSI was down 3.93%. Moving on to the Asian markets, Japan was up 0.44, Australia up 0.52, New Zealand up 1.16. Looks like the Chinese markets were mostly red today. Shanghai was down 0.99, the SESE component down 0.94, the China A50 down 1.35. The DJ Shanghai down 1.03, and the Hang Seng came in down 1.51, and the Taiwan weighted up 1.39%. So kind of a mixed day across the board. Again, like I said, kind of a late afternoon rally. Put most of our U.S. indexes into positive territory. So, all right, well, let's go ahead and read through today's market recap. Stocks ride tech surge again after Tesla's earnings beat. U.S. stocks rebounded on a surge in tech as Tesla's better than expected earnings boosted the sector. Tesla surged nearly 10% in late afternoon trading. Its quarter was affected by factory disruptions in China, where operations shut down for a while because of COVID, but it managed to beat expectations anyway. In economic news, the new jobless claims rose to 251,000 last week, a third weekly gain in a row and the first time above 250,000 since January. Meanwhile, the European Central Bank raised interest rates by 0.5 percentage point, which was larger than the quarter point move that was expected. It was the ECB's first rate hike in more than a decade as it too tries to combat inflation. The Federal Reserve is expected to make another move on interest rates next week. Corporate earnings continue to roll in, and for the most part, companies have been beating expectations. American Airlines shares fell 8%. Its forecast profit for third quarter on strength of travel demand, but said it would temper its capacity plans despite the demand. AT&T shares fell nearly 8% after the company said it noticed customers were paying their bills a few days later than before, suggesting households were grappling with budget crunches. Oil fell WTI was down 3.5% to 96.36 a barrel, while Brent crude fell 2.7%, excuse me, to 103.94 a barrel. Gold futures rose 0.9 to 17.15 an ounce. All right, so that's kind of the big picture of things. Earnings, still look pretty good. Again, that is going to be a lagging indicator, kind of like unemployment. Companies won't, companies will start feeling the pinch and seeing the pinch in their, in their numbers, and they'll, make changes accordingly. All right, and on those job numbers, U.S. initial jobless claims topped 250 for the first time since January. The U.S. labor market appears to be cooling at last. The number of people making initial claims for jobless benefits rose by more than expected last week to 251,000, its highest level since January, the Labor Department said. Continuing claims likewise ticked up by about 50,000 to 1.384 million, in a sign that it is starting to get a little harder for newly laid off to find another job immediately. The numbers corroborate increasing anecdotal reports of companies either laying staff off or slowing hiring as the U.S. economy begins to cool under the impact of higher interest rates. This week alone, Apple, Microsoft, and Google have been the subject of such reports. The cooling process was also reflected elsewhere on Thursday as the Philadelphia Federal Reserve's index of manufacturing activity fell by much more than expected in July to negative 12.3, its lowest level since May of 2020. Analysts had expected a modest bounce from last month's reading of negative 3.3. The index of general business conditions also fell to negative 18.6. The survey showed sharp drops in all but sub-indices that go to make up the main index. New orders fell particularly sharply, but the employment and prices paid indices also declined. So it looks like things are starting to slow down. Again, it's not unexpected, but again, the news will try to paper over this and make it seem like it's no big deal. All right, one last article here has to do with currency and the future of it. The digital U.S. dollar is a threat to civil liberties. This comes from Zero Hedge. The U.S. CBDC, as they like to call it, could be a route to a civil liberty erosion, the same liberties that Bitcoin inherently protects. For many people, Bitcoin is synonymous with freedom, decentralization, independence, and the future. Some consider it akin to anarchy, an online revolution that began with the minting of the first block of Bitcoin that flipped the proverbial bird at the central banks and government policymakers. I like anyone who flips the bird at the government. For governments, however, the vista is different. Generally speaking, those who govern others routinely perceive the cryptocurrency ecosphere as a lawless place used to fund terrorism and other illicit activities, launder money, and evade taxes. Well, the government steals enough money from us. If anyone avoids taxes, I'm not really going to be mad at them. In response to the trillions of dollars of investor and commercial interest, President Joe Biden issued an executive order calling on the government to examine the risks and benefits of cryptocurrencies. The executive order's explicit aim is to explore a U.S. central bank digital currency, or CBDC, which would be a digital fiat backed by the United States government. But if the original purpose behind the creation of cryptocurrency was to eliminate government control and oversight over fiat and monetary policy, how far would the U.S. government's control over its citizens' digital currency extend? The executive order says that the, quote, principal policy objectives of the United States with respect to digital assets are as follows. We must protect consumers, investors, and businesses in the United States. End quote. I think it's more about them protecting their own interests so that they can illicitly steal from us on a regular basis. The policy goes on to articulate that digital assets have, quote, profound implications on crime, national security, and the ability to exercise human rights, financial inclusion, and equity. Well, I hate those two words, inclusion and equity. They're BS woke words. And energy demand and climate change. Oh, wow. Climate change is important, isn't it? The executive order isolates the asset class as, quote, non-state issued digital assets, end quote. Future regulatory governance and technology measures will purportedly be designed to, quote, counter illicit activities and enhance efficacy of our national security tools. While there's no denying the dark side of cryptocurrency, its possible criminal uses, not only does the United States want to regulate cryptocurrency, they also seek to control it. Yeah, I find it funny that a government that bombs and murders people in foreign lands is worried about the security of currency. It appears a sure bet that the United States government will, 1, regulate private cryptocurrency, while 2, issuing its own government-controlled digital token. And in the context of the world's leading liberal democracy founded on a rule of law based on limitation of government powers, this development warrants serious scrutiny. Going all the way back to the formation of the United States, the founding fathers were skeptical about giving banks and governments control over currencies. During the drafting of the U.S. Constitution, John Adams drew upon the colonists' distrust of government-issued money and declared that every dollar printed fiat money was a cheat upon somebody. The drafters left the federal government with only the power to, quote, coin money and forbade the states from making anything but gold and silver coined legal tender. Years later, in 1816, Thomas Jefferson wrote that banking establishments are more dangerous than standing armies. I wouldn't disagree. And the principle of spending money to be paid by posterity under the name of funding is but swindling futurity on a larger scale, end quote. The advent of Bitcoin appeared to be the antidote for centuries-old problem identified by Jefferson. Bitcoin was specifically designed to obviate the need for a central bank or single administrator. In fact, Bitcoin does not need government support or to be backed by gold or silver. Bitcoin was architected to comprise a store of value whose value would be determined by the global population's free market dynamics via simple supply and demand arithmetic. So why should any of this matter? At times, the U.S. government has historically suppressed the rights of Americans, and many Americans have shown that they are more willing to give up those freedoms. It is only a matter of time before the United States issues a digital currency and likely attempts to suppress, through whatever means, the value and utility of Bitcoin, along with the rights of its citizens. With a U.S.-issued digital coin, the government will have the technical capability, among other things, to limit and apply pressure on what Americans can purchase, to track and monitor citizens' expenditures, and place limits on quantity or amount of products we purchase. In extreme cases, the government could rescind or remove all CBDC funds from circulation or from a person's control. That is already a reality in criminal cases. But here, the concern is the ability and willingness of the government to use digital dollars to monitor and control, even without the existence of criminal charges or a conviction. These concerns are not merely hypothetical. Last year, the Canadian government ordered financial firms to cease facilitating any transactions from 34 crypto wallets tied to funding trucker-led protests over COVID-19 vaccine mandates. Examples in the United States are easy to conceptualize. If the Congress believes that cutting down on gasoline would lower emissions enough to reverse climate change, they could put spending limits on the amount of gas one could purchase. Instead of raising taxes on cigarettes, the government could nullify all cigarette purchases made with digital dollars. While this in party will be temporarily satisfied at the expense of the out party, fortunes could change fast. Constitutional questions, which often take years to resolve, notwithstanding, where a Republican administration might ban the use of digital dollars to pay for Planned Parenthood services, for example, a Democratic administration could just as easily ban the use of digital dollars to purchase guns or ammo. The reality is that both political parties may well be tempted to utilize digital dollars to influence societal behavior and punish transgressors by restraining the ability to use the currency for travel, education, and other essential life activities. So are we headed inexorably at a warp speed towards a future where, as George Orwell warned, quote, nothing was your own except for the few cubic centimeters in your skull, end quote. Will the United States government utilize digital coins to create a social credit scoring system on par with China's? That depends not only on the government's actions, but on the vigilance of lawyers in private practice and civil libertarians more generally. Careful attention must be paid to any efforts by the government to utilize digital dollars for surveillance, control, or unlawful restriction of individual privacy and liberty. Because after all, if love of money is the root of all evil, then unconstrained U.S. government-issued digital dollars may turn into the mother of all evils. So just some things to think about. I know some people are probably in favor of a digital currency from the United States government. I am not. I would prefer to have currency where they have no control over it, and it is just based upon the free flow of the market. So, all right. Well, that's everything I had for today. I hope everyone got something from this. If you didn't, I'll try better tomorrow. Tomorrow's Friday. I'll be back with the weekly wrap-up as far as how the markets performed this week and any other exciting news that may have occurred. So hope everyone has a fantastic evening, and I will see you then. Adios.